Elon Musk and Tesla have had a difficult start to the year, as the EV manufacturer's stock has dropped more than 35% so far this year, reversing a significant portion of the enormous gains the brand experienced in 2023. It is currently one of the poorest performing companies in the S&P 500, with its lowest levels since January. Boeing, another troubled corporation, is not far behind it. How did we arrive here for Tesla, then? Back in January, they issued a warning about noticeably slower sales growth, which heightened investor anxiety about Chinese competition and stock demand. Elon Musk, the CEO, went on to say that the company would be concentrating on producing its next generation automobile. That day, Tesla's stock had its biggest percentage decline in almost a year, wiping off $80 billion in market value in a single day, a record-breaking decline. The path ahead is obviously anything but easy, as seen by Tesla's decision to suspend plans for a new factory in Mexico and by Ford and GM's difficulties with EV sales. We'll talk about the high insurance premiums, the risks of electric vehicle fires, and the impending supply chain problems brought on by China's hegemony in battery manufacturing. The key issue still stands. Is the EV dream becoming less appealing? Is the market prepared for such a significant change? And are governments pushing too quickly and too hard? But first, be sure to subscribe to Tesla Stock News and like this video to show your support. Let's begin. The EV market is going through a rough period. According to a startling new analysis, the electric vehicle market is in serious decline. Automobile manufacturers are losing billions of dollars as a result of their inability to market EVs. In addition to exposing three serious issues that have caused Tesla's stock to fall by an astounding $80 billion in a single week, this research explains why EVs may not be the future that everyone had anticipated. What is contained in this report? Is there anything that political leaders are hiding? Is it possible that EVs are more of a fraud than a remedy? Prepare to learn about some concerning failures that have surfaced if you believed that automakers were the only ones driving the push for EVs. The story begins in the middle of 2023. As more companies introduced their electric vehicles, EV sales increased. But when seasoned EV owners began to relate their terrifying tales, realism set in, and the actual difficulties of owning these cars became apparent. Consumer Reports has revealed that EVs may not be as safe as claimed, exposing a number of EV firms, including Tesla. We'll go into more detail about that shortly, so stay tuned. The EV industry may be the next major catastrophe, according to some prominent economists who are raising the alarm. In Arizona, there are numerous electric cars parked outside of a closed movie theater, which raises concerns about the EV sector. According to Steve Nelson, one expert claims that the overflow lot may be an indication that the EV market has slowed overall in 2024. According to Clay of EV Access, hundreds of electric cars are rented out to enthusiasts. Electric vehicles are the best option for Phoenix's future in terms of snagging the direction the auto industry will take. More Teslas are available for leasing here than anywhere else, and demand is commensurate. Therefore, Tesla is able to take a better approach to the total product because they were able to identify the market niche so early. However, Hertz is disposing of its Tesla fleet while his rental business is doing well. Nearly 250 Teslas, some of which are Cybertrucks, are currently parked outside of a boarded-up movie theater in Scottsdale. The majority of the vehicles are brand new and still have their plastic wrapping on. These overflow lots are indicators of sluggish demand, according to industry expert Carl Brower of icycars.com. There are a lot of brand new Teslas there, and the number is constantly growing. They are obviously having trouble finding buyers for these vehicles. Questions concerning the number of EVs were not answered by Tesla. In 2024, the entire industry has slowed. An increasing number of consumers are abandoning EVs in spite of all the hoopla and the government's alluring $7,500 tax credit. Even industry titans like General Motors and Ford are feeling the heat. Ford had to reduce its investments after its EV sector lost more than $1 billion in a single quarter. With EVs reducing its earnings as well, GM isn't doing much better. California, a leader in the electric vehicle revolution, has pledged to phase out gas-powered vehicles by 2035. The twist, though, is this. In the final quarter of 2023, Tesla sales in California fell by 10%. That's important because California has been the largest market for Tesla, the EV movement's poster child. What's going on here, then? There are numerous explanations. Government incentives are unclear, public charging infrastructure is in disarray, and the cost of these stealth electric cars is exorbitant. Additionally, Elon Musk, the CEO of Tesla, has been making some contentious remarks that may be alienating customers. He even forecasted that the EV market might soon be dominated by China. Let's examine the current situation of EV sales first, though, before getting into that. In a single year, Ford and GM's EV operations lost $5 billion, which translates to a $36,000 loss per EV sold. Once a successful company, Tesla had to lower prices 7 times in 1 year in order to remain competitive. In the end, even though EVs are appealing to consumers, they are unwilling to pay outrageous pricing. The Biden administration's current 80% reliance on China for EV supplies is raising production costs and establishing a dangerous reliance on a foreign nation. EV sales were skyrocketing at the beginning of 2023, but they abruptly plummeted. Due to rising interest rates, owning an electric vehicle is now even more costly, and buyers are starting to turn back to hybrids and conventional gas-powered automobiles. Even the CEO of Toyota is disparaging EVs and placing large bets on hydrogen and hybrids, and it's not limited to the United States. Even though the EU plans to outlaw gas-powered vehicles after 2035, EV sales are declining in Germany as well. Ford, Toyota, GM, and even Tesla are reconsidering their EV policies as a result. A change in the electric car industry is indicated by Tesla's recent cancellation of plans to construct a new EV facility in Mexico. Additionally, General Motors has stopped producing its most economical electric vehicle, the Chevy Bolt, and postponed the manufacturing of its electric trucks. Ford, however, has stopped producing the F-150 Lightning because of poor sales results. The market leader for a long time, the F-150, isn't doing as well as it could. It's turning out to be harder than expected to persuade devoted consumers to go electric, almost like trying to convert a steak lover to veganism overnight. However, the problems are not limited to sales. There are numerous obstacles that could prevent EVs from being widely adopted, ranging from range anxiety to malfunctioning software. The absence of charging outlets is a big issue. It's like having a phone but nowhere to charge it. The popularity of EVs initially appeared to be fueled by a surge of government restrictions and incentives, but as these are being phased out, so is public interest in EVs. Sales of EVs have suffered in nations like Germany and France, where government incentives have been cut. Excitement is further tempered by the fact that fewer cars are now qualified for the coveted tax cut in the US. Let's explore the risks revealed by the most recent EV report, which has caused Tesla's stock price to drop by billions of dollars in a few short days. Imagine being thrilled about these stealth, quiet EVs only to learn that they may be more problematic than conventional gas-powered vehicles. A startling 80% of EV owners, the research found, would never contemplate purchasing another one. Based on a survey of 330,000 cars, this conclusion identifies a wide range of faults, including leaky systems, infotainment glitches that never seem to work as intended, electric motor malfunctions, and engine problems. The major automakers, who are still learning the nuances of electric vehicle technology, and the newcomers, such as Rivian, who are only now starting to understand the complexity of auto manufacturing, are the two main culprits named in the research. Everyone is attempting to put these electronic puzzles together without losing any pieces, as if they are stumbling in the dark. Electric drive motors, charging troubles, and of course, the batteries themselves are the most common issues. Finding a socket isn't the only problem with charging, though. The car's tantrums when it's time to recharge are another. Some EVs won't accept anything less than simple fixes. If you require any other changes, please let me know.